Alright, so a majority of the stock market is down year to date, but now is a good time to be looking into undervalued stocks. Today I'm going to be looking into dividend stocks on FINVIZ to screen through which ones are undervalued to add to my watch list. If you don't know what FINVIZ is, I have an older video where I just quickly go over the website, but I'm just going to click on screener. Now here you can customize what you want in a stock, but for me I'm just going to do a quick screen. And for that I'm going to sort by market cap. For me I just want a mid-sized company, so around over $2 billion. And I want a stock that has a high dividend yield of over 5%. Preferably a low PE. Right now the market's relatively high. So like for example, Walmart has a 25 PE. So I'm going to look for something low, probably under 10. And I only want to filter the American companies. So I only filtered 4 things and now I have it narrowed down to 39 stocks. So I'm going to sort this list by the highest in market cap and I'm going to go down and just pick out stock that I'm familiar with. So I'm going to choose Verizon, AT&T, Western Union, UWMC. I'm gonna go to the next page. And on this second page, the only company I'm familiar with is Foot Locker. Alright, so now that I picked out my 5 companies and have them tabbed, I'm gonna go to stockanalysis.com and check out their finances just to check out the status of the company. First I'm gonna look at was Verizon. Alright, so now that I have Verizon pulled up, I'm gonna max out the chart and just see where it fares from the past. So if you look at this, right now it's trading around $49, which is around its 2018 price. And a quick overview of the company is showing a 9.5 PE with a 5.1 dividend yield. I'm just going to take a quick look at their finances. So taking a quick look at their finances, year over year, their revenue growth has remained relatively stable, excluding 2020. Their gross profit is also fairly stable, around 77 billion. Now the shares outstanding are increasing, so that's one negative thing for the share price. But they have increased the dividend for the past 10 years, so that is a good thing. And their profit margin looks relatively stable. And if you take a look at their net income, it has increased over the past 10 years, so it's currently standing around 22 billion a year, so that is a good thing. Now a few negatives for Verizon might be that since it's a telecommunications company, it has to grow to build its new infrastructure and towers. And on the consumer side, people are looking to spend less money, so as the consumer spending declines, their revenues might get hit. Now the next company was AT&T, so I'm just going to look that one up. Now a main thing for AT&T is that they recently spun off their Warner Media production, so now that's a separate entity. But if you look at the charts of AT&T, I mean it's currently trading near its all-time lows, but it does have a PE of 8.5 and a dividend yield of 9%. And if you were to look at the finances of AT&T, I would hold off and look at it quarterly now that it finally spun off from Warner Media. Since it is a telecommunications company, its expenses might increase and that'll affect its overall revenue. You can see the past 3 quarters, its revenue growth year over year have been a decline. So for me, a major con will be the same issues that I had with Verizon. On additional, the spinoff that Warner Media Group might affect the revenue of the company. So after AT&T, the next company on my list was Western Union. And if I were to zoom out on the chart, you would see that it's trading near its price before COVID in 2019. It has a PE of 7.5 and a dividend yield of 5.5%. Taking a look at their finances, this company has remained relatively flat even since before COVID. 2021 was their abnormal year of 4%, but normally they've been trading either negative or at a 1% revenue growth year over year. So their shares outstanding is decreasing, so that's good as the company's doing buybacks. And the dividend growth has also been increasing for the past 10 years. And the company has a relatively steady profit margin of around 15%, excluding 2 years. And over the past 10 years, the net income is relatively around the same. So it's been around 800 billion with offset on a few years. But a major issue for this company will likely be its loss of market share to either banking services or even cryptocurrencies. If Western Union can't keep its prices low, it'll likely lose its revenue to other competitors. And the next company to look at was UWMC. So UWMC is a mortgage lending business, but instead of dealing with the consumer directly, it handles business to business wholesale transactions. And if you were to take a look at it, I believe it IPO'd as a SPAC in 2020, so it doesn't have much information about it. But currently the company is trading near its lows at $3.09. But if you were to take a look at the PE, it's a 7 and a dividend yield of 10%. Now, unfortunately, the company did just recently IPO, so there's limited financial information, but last year it did show a net income of $98 million, so the company does trade relatively small. But a major issue for UWMC is the future housing market and the rising interest rates. But they don't deal with the consumer directly, they're a business-to-business lender, so for that, I'll probably just watch it quarterly to see how they do. And the last company to look at would be Foot Locker. Now, if you were to max out the chart, you could see that the company is trading near its 2019 price with a PE of 3.5 and a dividend yield of 3.9. Now, looking at the company's financials, its year-over-year revenue growth has remained relatively stable, excluding 2020. It's even been lowering its shares outstanding, so it has been doing company buybacks, increasing the share price. And their dividend has increased over the past, excluding 2020, where they likely slashed the prices to keep operating costs low. And if you were to look at the cash flow statement of the company, for the past few years, it has remained fairly profitable, around $400 million. But for 2021, it had an all-time net income of around $900 million. But an issue that Foot Locker may likely face has been the rise in retail stores going directly to consumers like Nike, and there was even talks of rumors of Nike pulling out of Foot Locker stores. Another issue that they likely will face will be the decline in consumer spending, which will likely hurt their revenue. I talked about it in an older video where the top retailers will likely see declines. So while the overall market is facing a decline, this is a perfect time to try and find and screen your own undervalued stocks. This was just a quick insight on how I quickly find stocks using FINVIZ. If there's any undervalued stocks that you're looking into, let me know down in the comments below. And if this video helped you out in any way, like or subscribe so I can continue making content just like this.